Fear changes everything. It slows the market, freezes decisions, makes even confident buyers second-guess the dream they've been chasing.
15% of home buyers, that's 1 in every 6 people, 1 in every 6 families are walking away from the contracts literally right now.
The numbers don't lie, but they do whisper. They tell you when power shifts, when opportunity quietly changes hands.
This is the most buyer's market I've seen since I've been in real estate, quite frankly.
Contract cancellations hit 15% in major markets. Homes are sitting 53 days on average on the market. That's 7 days longer than last year.
Because that moment, when the math meets emotion, is where real decisions are made.
So everyone's a little bit scared, a little bit unsure, and they're trying to figure out how to make the best move, and they're being very, very careful as they do that.
Get in contact with the lender, and not just one. Get a quote from 2 or 3 lenders and see what they can offer you. And I would say don't. What's going on, family? Listen, if you're thinking about buying a house right now, for a minute, I need you to stop and pause. I'm gonna say stop or pause, because pause simply means I want you to gather some information before proceeding forward, or stop and just turn back around. Because what I'm about to show you could save you from making some big financial mistakes of your life. Here's what they don't want you to know. 15% of home buyers, that's 1 in every 6 people, 1 in every 6 families are walking away from the contracts literally right now in October of 2025. And it's not because they changed their minds. Watch this. It's because they discovered something the real estate industry has been hiding from us for a long time. And today I'm sitting down with 2 of my personal real estate agents, part of the Coalition Group. Keith is my real estate agent, and Ryan is one of his partners. And they have the #1 real estate company here in the DMV area. And they come on every month. But last month Keith was out with his woman, so we missed this situation. But today they're going to reveal some things that I need you to understand. Are you a part of the 15% of the people who need to walk away, and why 2025 might be the year everything changes going into 2026? We're covering the lies you've been told, the math they don't want you to see, and watch this, the exact moves smart home buyers are making right now to win in this market. Watch this. I need you to stick with me to the end. Just give me 25, 30 minutes, because we are going to give you the exact blueprint of what you need to do to help you make the best decision when it comes to building wealth through real estate. All right. So I'm here with my brother Keith and Ryan, 2 agents who've been in the trenches of this market shift. So before we dive in, let me set the stage with what's really happening for you all out there. All right, here we go. And put these numbers up on the screen for me, man. Contract cancellations hit 15% in major markets. Homes are sitting 53 days on average on the market. That's 7 days longer than last year. Inventory is up 35.8% year over year. And some forecasts and predict that home values will actually drop about 1% through 2025. Just last month, I had 3 people in our community tell me their dream home purchase fell through, not because of financing, because they discovered something during the process that made them walk away. And that's when I realized this isn't an isolated incident. This is starting to become a pattern. And so I want to bring in my brothers back on the show. First off, it's been 2 months. Where y'all Negroes been?
In the trenches, you said we've been in the trenches, man.
I know y'all have. I know y'all have, man. I love y'all. I'm happy to have you all back. And so I'm thinking, you know what? I just went through the numbers. Let's talk about that. Talk to me about those numbers. Can you all confirm those numbers? Are you all seeing those numbers from your particular chairs?
Yes. Absolutely. And we've seen it go up and down with some variances. I mean, we've had some months where we've seen, 10 contracts fall out.
Yeah.
Are you serious?
Yeah.
In 1 month, yeah.
10 contracts?
10 contracts fall out in 1 month.
And what would you all say is the main reason the contracts are falling off?
I think the main reason is fear.
Yeah.
I think
Fear.
fundamentally, that's the main reason. You know, people talk about this thing or that thing. They might say, oh, it's the financing, or we found some in the house. And those are all valid reasons,
Right.
but those feed back into the basis of it is that it's just everyone's a little bit scared, a little bit unsure, and they're trying to figure out how to make the best move, and they're being very, very careful as they do that.
And the stat that you said, the inventory is up. So with fear, they're like, oh, well, forget this deal. I'll just go to the next property. You know, it's more inventory, it's more choices out there for them to choose from because properties are sitting longer. So if the smallest minute thing can go wrong with a deal, where they're like, oh, no, I can go get this. I can go get a better deal over here.
Yeah. And when you say that, we're talking about the 15%. And I think one of the main questions that I have when I told our community we'll bring you all back on, they was like, but what happened to the statement of everyone's been told buy now or be priced out forever for the last few years? Would you all say that that's still a statement there? Like now is still the best time to buy? Or is it maybe now isn't the best time to buy? Maybe right now the best time is to sit still? When do we say now is the best time or right now is not the best time?
This is the most buyer's market I've seen since I've been in real estate,
Okay.
quite frankly.
Okay.
Due to where interest rates are at, not only the fear of the people that are in the deals, but the people that are on the sidelines. There's so many more people on the sidelines waiting to purchase. And so therefore, properties are sitting longer. They're not as competitive. You can get closing help from a seller.
Yeah.
More so, if I'm writing up 10 contracts right now, 70% of those, I'm getting some type of seller subsidy, meaning that the seller is paying the buyer's closing help, which in the 2%, 3% interest rate market, that was never happening at all. But you know, now rates are 5, 6%. You can get a little bit more on the buyer side now. And so that's for right now, this is the most buyer's market I've seen since I've been in real estate, quite frankly.
I have an audience of people who are babies in this whole financial space.
Yeah.
Been renting forever.
Yeah.
Real quickly, can one of y'all explain the difference between a buyer's market and a seller's market that a high schooler can understand? So they really know, okay, when they're saying buyer's market, this is what they literally mean, or seller's market, this is what they literally mean.
Sure. A buyer's market means that there's more than 6 months of inventory in any particular location. And a seller's market means that there's less than 6 months. Then there's a balanced market, which is right at 6, but there's never, you know, you're never going to be perfectly at 6. So anything that's under 6 months is considered 6 months of inventory is considered a seller's market. And anything with more than 6 months of inventory is considered a buyer's market.
And when you say inventory, you're meaning as if?
The number of homes that are on the market. So if there were no more homes that came on the market, how long will it take for all of those homes that are on the market to sell?
And you're saying right now it's on an average of 6 months.
That's how you define a buyer's and seller's market. Now, in our region, you know, every real estate is local, hyper local. We're seeing that in DC, we are actually approaching a buyer's market. We've been at about 5.7 months of inventory in DC proper, like in the city. Now, when you go to Maryland or Virginia, it's still a seller's market, but what you're saying is that it has softened, meaning it's not like a months of inventory now. Now it's a couple months, it's 2-3 months. And so, but they're still moving. It's still a seller's market over there. So that's how you define buyers and sellers market.
What happens to your family if something happened to you? I'm gonna ask that again. What happens to your family when something happens to you? You see, life insurance feels scary. It feels complicated and even expensive. But here's the thing, it doesn't have to be anymore. Most of us are walking around with no life insurance policy, but we have a name brand item. Thinking, I'm young, I'm healthy, I got time. Family, I want to be honest with you, I'm so sorry. That's not faith, that is pure foolishness. Here's what I love about my friends over at Ethos. They've made getting term life insurance 100% simple. No medical exams, no waiting weeks for approval. You can get a quote online in literally 10 minutes like myself and get approved the exact same day. We're talking coverage from $100,000 up to $2 million with absolutely no blood work for way less than what you actually think. Term life insurance is pure protection at a fraction of the cost of whole life insurance. Look, a healthy 30-year-old can get a $500,000 policy for about $25 a month. That's less than your Netflix and Spotify combined. Listen, your family deserves to be protected. Don't leave them struggling to pay bills and funeral costs because you kept putting this off. While you're in heaven, smiling, your family's down here stressed because of your poor decisions. Listen, stop playing games with your family's future. Get your free quote today in 10 minutes by going to anthonyoneal.com/ethos. Again, go to anthonyoneal.com/ethos. And I promise you, you will feel way better and sleep better at night. All right, let's get back to today's show.
Right now, we're going through a negotiating process. We may or may not get this house. Keith did tell me, Anthony, you kind of lowballing. I said, I got it. I'm saying,
Hey.
It is what it
It
is.
is what it is. We submitted it too.
Hey, listen, I mean, and which leads me to that question, because I think a lot of people are somewhat confused. Walk me through, Keith, because we're going through this literally right now. Walk me through what a typical negotiation looks like versus maybe, let's say, 2 years ago, 3 years ago, when we could say that was a seller's market, not a buyer's market, right?
Yeah.
So right now, with this coming up on a buyer's market in DC, still somewhat of a seller's market in PG County, Maryland area, or wherever they are, what does negotiating look like today that benefits the consumer who wants to buy something?
Absolutely. So with the offer, we probably wouldn't even had a chance to even submit the offer due to time, because that property would have been gone probably in 24 hours. And it might not have hit the market 2 years ago.
Got you.
Yeah, it might not have hit the market because of how good the deal is, right? On paper. Right now, we can go in and say, hey, let's see how much flexibility this seller has. Let's see how bad they want to sell. Let's see where they're at mentally, right? From a negotiation standpoint, how desperate are they to do this deal?
Okay.
So when you brought me to, let's do, Keith, how about we do X, Y, and Z? Absolutely. Let's see what they say. Now it's a let's see what they say market, because typically you wouldn't get a counter back in a 2-3% interest rate market. Now you can get a counter back on a lowball offer. And you have time. A little bit of time to get that. Now, we submit the offer, they're gonna counter us back. And I can, like what we talked about yesterday, Anthony, this is what you probably should expect in a counter back.
And you did.
These numbers.
You did.
Right? So the fact that you can get that counter back on a lowball offer now, that's what you want. That's what you want.
Would you recommend people, because I don't think I lowballed them, but if you said
the consumer never thinks it's a lowball offer.
I'm gonna be real. I'm gonna keep it a buck, bro. Like, I get it. Y'all share like, oh, Anthony. I'm like, but in my chair, I'm like, bro, this is where I'm at right
100%, 100%.
And one thing I respect about you being my realtor, you was like, yo, bro, this is investment property. You know, just we only can ask for what's in your budget. Right?
Absolutely.
Do you all suggest people, even if they know, wait, it may get turned down, do you still suggest that they still put in an offer? Even if they know it is low?
We kind of I'll say shoot the shot right now. I'll say shoot the shot, because I've even been surprised on some of the counters I've gotten back when I've shot in the shot.
Or the acceptance.
Or the acceptance. You're right, bro. The acceptance. Oh my God. Yeah. Even when you get into the deal. So then there's this inspection piece, right? You're doing an inspection and you're asking the seller to do certain things, whether it's repairs or asking for credits. I had a deal recently where initial offer, we got a $50,000 discount on a multifamily property. $50,000. We went in, $50,000 less, and they accepted the offer. During the inspection, I asked for another $40,000 to help with repairs that were needed on the property. They accepted it.
What?
Wasn't even a counter. Okay, Keith, we'll do this. $40,000. So that's a $90,000 discount in the DMV market, in DC. $90,000 discount. Now, Anthony, you can't get that on this deal now, okay?
No, I mean, here's the truth. On this deal, I'm not expecting that kind of a discount. It's just that, hey, man, this is where I'm at financially.
Yeah, 1,000.
You know?
I actually think that's a great place to be. I think when you put the investor mindset on, you put the investor hat on, I'm in the same boat. I mean, I can't go over this. I know it's $3,000 more, but
Thank you.
I can't do that either.
100%.
Same thing I told Keith.
He said, they said, yeah.
I know it's just $6,000 more. I said, but Keith, right now, I just can't do that because I have other priorities.
For sure.
And what I tell you, when I got at the airport yesterday, I said, Anthony, I know you want the $4 or $5 million house. What I say right now?
Yeah. Keith told me don't even move.
Yeah.
Because I was like, man, I like my home, but I was like, man, Keith, no, I've been wanting a modern home. And so he was like, Anthony, right now, nah. Not right now. Not for your primary investment properties like this. Anything below 400. Ride on it all day long.
For sure.
But when you trying to sell your main property, because I won't say what my lender said, but they seem like they got some interesting deals out right now, right? And so I was like, well, Keith, he said he could do this.
I'm sure he can.
And Keith was like, yeah, no, but you still got to drop $4 million. Don't do it. Don't do it. Just keep your house. And he told me to stay there, what, a year or 2 years?
Yeah.
And I was like, Keith, bruh, 2 years? He was like, yeah. He said, but let's keep buying rental properties.
Yeah.
Facts.
But don't get into a big primary.
Yeah.
Because of where you are and what you're trying to do, right now you need to take advantage of the rental space.
Yes.
And so he's helping me, and that's what I love about this company, y'all. We're gonna put their link inside the show notes, so where if you are in the DMV area, man, they can service you well. If you're outside of the DMV area, still hit them up because they have partners in other cities that could possibly help you out as well. But if you're in this area, hey man, listen, all day long, these guys right here are gonna get you right. Because I like, and this is one thing I like about Keith. $4 million, let's be real, that's a good commission check.
Oh yeah, absolutely.
That is a real good. And Keith was like, yeah, nah, bro, I know you got the money. It's an easy approval. But Keith was like, nah, you my guy. And I want, this is a long-term relationship.
Absolutely.
And so I care more so about building with you. I'd rather sell you a $400,000 rental property than a $4 million property. Like, that speaks volumes about y'all's character and integrity as an organization.
Absolutely.
For people. Because Keith could have been, oh yeah, bro, let's go look at it this week.
Yeah.
You know? And I love that. What would you say though? What would you say? If you know you're gonna lowball?
Yeah, I'm on the same boat. I'm probably, to be honest with you, I'm probably more aggressive.
You need a new client. He won't let me. Hey, y'all work in the same group, my guy. You
integrity, all that stuff he just talked about.
I think, hey, he was, because now that's one thing I would definitely say, which I love about y'all. Again, he was like, Anthony, this is already a good deal.
Facts.
It's already a good deal. So they're not getting over on you, right? He was like, but I understand where you are as in a budget. You know, we got some big things coming up here soon. I was like, bro, my funds are already allocated here, but I can move this. I called him and my banker. I said, bro, he sent me back the numbers. I said, bro, I'm sorry, we're over about $6,800. I can't do it.
Yeah, 100%.
Yep.
He couldn't be a penny over where he needed to be. He said,
can't do it.
Yeah.
I said, bro, so there's no way. I understand it. I respect it. I just got to wait for another deal to come back.
No, I think you're good. I think, you know, there's nothing wrong with submitting the deal. In fact, I encourage people to submit the deal because we as a people tend to assume that, you know, we're not worth or we're not valued at where we really are. And then that's one of those situations like, why aren't you taking that risk? Because it's not a risk. It's actually a reward. It's a reward for sticking to what's important to you, right? It's a reward for sticking by your guns, right? Instead of saying, no, I'm not going to even give it a shot. I mean, look how many times people put out their resumes and they not qualified and this, that. It's the same kind of thing. It's like people are afraid to put out an offer because they're afraid they're going to get rejected. It's like, all right, move on to the next one. Especially right now, you know, there was a point in time where the buyer was on the hunt. And now the sellers, you know, you a bad B now. You a bad buyer now.
You're a bad buyer now.
I was like, hold up, wait a minute.
You a
You a bad buyer now.
Hey,
they want you.
Tell them.
You know what I mean? They want you. Yeah. So that's the reason why people go, I'll walk away and get another one.
Yep.
Who say that? Now, you know who say that. All right? You got to be bad to do that.
Yep.
Walk away, I'm going to go get another one.
Exactly.
So that's what's happening right now. And you should take, if you're in the market and you're able to afford through your income and lifestyle and everything, not overbuying and overpaying, etc. If you can afford it, you got strong options out there. You can really get what you want.
That's so good. That's so good. One of my concerns when I was just studying for today's show, man, is that some professionals, some experts are predicting the home values will actually drop in value. From y'all's chairs, do you all think that is true? And if so, why and how does that happen, if that makes sense? Like, we know homes to be assets and raise in value. What dictates or what makes the home decrease in value in the market?
Affordability. That's what it boils down to. When the interest rates are too high, if the interest rates, you look at the interest rate, and that sounds like, oh, this big heady macroeconomics thing. But then you bring it down to like eye level and say, oh, this is going to cost me $4,000 a month. I'm not paying that. Like that's that's what it boils down to. You're going to see a number at a price.
Yeah.
You say, I'm not paying that.
Yeah.
Right? And then you say, but I'll pay this right here.
Facts.
So now you're looking, and so now either you go to a smaller home or a different location, or you shoot your shot at the home, and you don't know what they're willing to take, because they're selling their home for a reason. Because they either have to sell their home, or they're in a position where, like, I want to sell it regardless. Like, I just don't want this headache anymore. I want whatever anymore. So that's your opportunity. Hey, nobody else is around. It's just me and you.
Yeah.
Like, let's make a deal.
Yeah.
So.
Okay. All right. Should we be concerned in the DMV area, I would say?
I think you should always be concerned.
Always.
Because this, I think people think that real estate is just so protective, because it is, but that doesn't mean you can't make bad decisions. So I think you should always be concerned and always be able to pay for, whatever you're buying. I think that's like, don't make the assumptions, all right, I'm going to have a renter, I'm going to have this, I'm going to this. All right, government shut down, right?
Yes.
Some people ain't getting no money right now.
Yeah.
So how they going to pay you, right? So you got to be able to pay for yourself. You got to have proper savings. You just got to be fiscally responsible.
So good.
And a lot of people, in every deal, as we do, we like to begin with the end in mind.
Yeah.
A lot of people don't begin with the end in mind. They just look at where they are on the front end of the deal.
Yeah.
But you got to look at, if it's an investment property, what type of cash flow you're going to get. What are your margins? What are your percentages on that margins? Can you go get that percentage anywhere else? And that's super important. And the affordability piece, the eye level, that's the main reason where I said, hey, Anthony, like, let's just sit for a year or two until the smoke clears.
Okay.
Right?
Okay.
Because right now, when you look at the market on the grand scheme of things, the investment world, like, this is an investor's market. Like, it's an investor's market right now. Investors are taking advantage from a buy and hold standpoint. You know what I mean?
Right.
They're taking advantage right now because they're not emotionally attached to the deal.
Fact.
It's strictly math.
Okay.
You know what I mean? It's strictly math, and that's the important piece of it.
Your money is sitting in a regular savings, making pennies while inflation is eating lunch. Wow. That emergency fund, that vacation money you've been stashing away, it should be working for you, not just sitting there. Here's the thing. Interest rates change every single month, and most people have no clue they're missing out on some serious money. Every single day, we update our list of high-yield savings accounts that are the best so that your money makes more money while you're working, while you're sleeping. We're talking about turning your savings into a wealth-building machine. Don't let your hard-earned dollars stay lazy. I want you to visit anthonyoneal.com/savings right now and see which high-yield savings account will put the most money back in your pocket today. Listen, go to anthonyoneal.com/savings, choose an account, put your money in there, and I promise you, your future will say thank you for giving us some more money.
If someone is saying, all right, Keith, Ryan, I think I'm ready in the next 6 months to buy a home. What are the things they should be doing now to prepare for that?
Saving.
Yeah, 1,000%.
Okay. When you
1,000%.
say saving, talk to me about that.
There was a time where, you could get into home. You still can even now, but you get in homes, low money, no money out of pocket. You're able to pretty much come out of $0, $500, $1,000, and those programs are great. They're still there. Here's the thing: because of the increase in cost of living, the increase in the cost of homes, right? You need to make sure you have that money in the bank too, in addition to that.
Yep.
Because the people who are buying right now, a lot of the people that are buying right now, it's because they got the money.
Yes.
Yep.
Yes.
They're not buying because, I'm struggling to get in the home.
Yeah.
And I empathize with people who are trying to get their first home. I was there. We all been there. Right.
Right.
So, and we love helping that group of buyers because, quite frankly, it's one of the best feelings in the world to help a buyer who thought they couldn't buy a home, be able to get in a home, and they're happy, and they're starting or in the middle of their wealth building journey.
And they're educated. We've educated them.
We educated them. They know how to move from now. They know how to move, right? But the people who are buying now, a lot of them are just more secure. They're able to buy because they feel secure. They got money in the bank. They got secure jobs. They're not stressed over those things. They're prudent. They're thoughtful. They're the type of people who are just being, and they're being aggressive. Like, nope, this is where I stand. I'm not going over this. I don't need to do this. I'll go get the next house.
Yep. And on top of that, also, if you want to buy the next 6 months, you need to speak with a lender now to understand your options. You need to take that blindfold off and see what your buying power is, right?
Yeah.
Understand your affordability, because here's what people do. They go on Redfin, they go on Zillow, and they start looking at properties, right? And they go look at that monthly payment on Zillow and Redfin. That monthly payment that's on Zillow and Redfin, it's not accurate.
It's not.
It's not accurate.
Nowhere near it.
Exactly. You need to speak to a lender to learn to see what a 2-1 buy down option is.
Okay.
A 3-2-1 buy down option. These are programs that have, since the interest rates have gone up, have come into the market for buyers to give them more flexibility to get into a home, right? You need to understand if you're not getting seller subsidy, what programs do you qualify for? And here's the thing. Majority of the time, when you do a program, there's an interest rate tied to that program that you can't control.
Yeah.
They're giving you money, you're gonna have to pay a higher interest rate. If you're getting money, you're gonna have to pay a higher interest rate. So when people are talking to their friends about, girl, I got into this house with I didn't have to come out of no money, but what your mortgage payment was. And if you didn't use that program, how lower would your mortgage payment have been? So you need to meet with a lender now to understand your options.
You know what, Keith? I ain't got a problem putting my business out there because, I think this is how we help people. You're right. On the deal that gave me, I sent you the numbers.
Yeah.
And you look back at it, and then when we called him on three-way, it was like, well, yeah, I gave him this, which made his payment go up.
Right. The points. Yep.
Points. And I was like,
yep.
You give me something, so you ain't really give me nothing.
Right. Right. Exactly.
I'm like, I'm a math guy. I'm like, wait. Oh, Anthony, I'm gonna give you 10,000, but I'm gonna give you this, or I'm gonna give you a lower rate, but I gotta charge you this. I'm like, so you didn't give me nothing.
Yes.
And I think that was important because when I sent you the numbers, you was like, well, Ayo, I don't see ABC.
Right.
He was like, hold on. Call him. And I called him and we talked, and I was like, huh. And my finance guy, man, he still did an amazing job as far as on the deal, which I think y'all need to use him more because this other situation y'all gave me.
That's your situation. First of all, I learned about that situation from you. Let's go back 3 years now. Okay.
I love all my situations.
Okay.
I'm a money guy.
I know.
This is important. We need to talk about it.
Yeah, 100%.
Because I think what I want to do a show on this one day, maybe next month. We need to bring in a real good lender. I'm gonna ask my guy if he can come back with you all because one lender came back. All right, let's just go there. I'll put numbers out there.
Do it.
My budget is $50,000 down
100%.
to buy this rental property.
Yeah.
I can't do $50,000 and $1. I can't do $50,000 and 99 cents.
Yep.
Like it has to be $49,999.99 or $50,000 on the T. I just can't do anything more. And so we called my guy. He sent this back a quote for 58.
Yep, 58.
And he was like, "Yo, let's get another option.
Yeah.
So we get another option. He come back with $78,000. And I'm like, wait a minute, because that option probably would have been my first option 2, 3, 4 years ago.
Yeah. Yeah.
Being real.
Yeah.
right?
100%.
And I would have been loyal to that because I have a relationship with them.
Yeah.
But then now, just from this situation, I was like, could I have gotten a better deal on my house now if I would have shopped around? Because I did not negotiate. And you did ask me.
Yep.
You did.
I just want to be clear. For your 1 million subscribers, I want to be clear. I want to be clear. Clarity is power.
I'm going to hold myself accountable, but I'm a loyal guy.
Yeah.
You know what I'm saying?
Yeah.
I've had different people come up to me like, nah, my guy's Keith.
Yeah.
I run code. And let's say Keith is down, I'm going to call Ryan.
Yeah.
Like I'm not gonna go outside of this umbrella because I'm loyal to people who take care of me. So I was like, well, I'm gonna be, but I'm like, yo, that is for the same home. It was a $20,000 difference.
Yeah.
Don't know if y'all can answer this question, but how was that possible?
I wasn't there.
Yeah, you wasn't there, but I will tell you, like, lenders that were 3 years ago, there were different playing field for lenders and what they could charge, what they could give for interest rates.
Okay.
For example, let's say a lender has an amazing program that they have a portfolio program. They're actually losing money on that program by doing that program. They're just trying to get a bunch of clients into their door.
Got you.
If that makes sense.
Got you.
They may have ran that program for a while when you bought.
Right.
Now they don't have the affordability to compete on the open market with other lenders because of the program that they ran 3 years ago.
Sometimes they will chop their arm off to get the business. Like you're like, oh, I got a great deal. It's like it's
a reason
costs.
why.
But so how does the bank make money though? If they chop their arm off and they got me in their portfolio, they got my, let's say, $800,000 on a home in this portfolio. In the long run, how are they making money?
That's a great question. I'll give you a simple example. A bank like Chase,
Okay.
right? They don't want you to leave at all, especially if you got lots of money with them.
Yep.
So they're saying we're managing your wealth over here. You're going to get a loan? No. We're going to give you a special rate because you are a VIP client. So you're going to have a special rate over here. Now they might have lost money on the transaction initially, but they're making money on the interest, they're making money on some other things, and they got the rest of your finances all under one umbrella, which that's what they love. They're trying to build scale and volume and those types of things. So that's a scenario where someone would cut their arm off. It's like, hey, this is a better lender. The rate's not too much off. It's like, no, we'll beat whatever they got because we want you here for everything.
Key word he said, bank. Mortgage lender. Some lenders are more flexible than banks. Banks, they are big box shops. They have to go answer to these people, that people. They have this box and they have to stay in this specific box, right? The bank does. The mortgage lender that is
Only specializes in mortgage.
only specializes in mortgage. That company only specializes in mortgages. And they don't have they're not trying to sell you a checking account or a savings account to be able to get some type of special rate, right? They can be more flexible with their lending, meaning $20,000 difference in cash to close or a lower interest rate.
Or they can go find, other programs or other loan types from whomever across the country, right? Because they can just be more flexible where, the bank is the bank and this is what we got and these are our products and we're not looking at anything else.
I was blown away.
Yeah.
I told Keith, I said, Keith, how for the same thing, how did they come down? His was 78, this one was 57,800 to be exact. I'm like, that's $21,000 that I could have spent more for the exact same house.
Yep.
I'm like, yo, which is why y'all, I hope you all, if you're within the next 6 months, two things that I truly want you all to do, which I'm so grateful for these guys to say this. Start saving now. Yeah. Start putting money into a high yield savings account that you can get 3.5 to 4 to 5% of your interest rate for your money just sitting there. And we'll put a link inside of the show description to where you can open up a savings account today. You can honestly go to anthonyoneil.com/savings. Look at all the best options on that page. Two, man, get in contact with the lender, and not just one. Get a quote from 2 or 3 lenders and see what they can offer you. And I would say don't do it on your own. Do it with the real estate agent. Do it with the realtor. Because if I was like, Keith, does this make sense to you? And Keith was like, no, bro, this doesn't have this, doesn't have that. And thankfully, you did that because you was like, this is too low, AO.
Yeah.
Because I was excited about the numbers.
Yeah. Yeah.
And he was like, bro, I don't see this in here. I don't see that in here. I was like, shoot. Then we got the numbers back. It came out to 58. I was like, oh, no, bro.
Yeah.
No, I can't do that. He was like, oh, I'm sorry, bro. I thought you was just talking about your down payment.
Yeah.
Which is another thing. We only think down payment, but you have the 5% down payment plus closing costs.
Plus closing costs.
And when you say down payment, the bank is not including the closing costs, right?
Right.
So you got to know that language, babe.
Which is your total cash to close.
But see, I did say that though. I did say, yo, I need to know how much. No, I didn't. I said, how much do I need to bring for closing?
Yep.
But not total cash to close.
Yep.
Yeah, I mean,
They should have known, though. Yeah, they should have known. You know?
I'm giving my man the benefit of the doubt.
Yeah.
it happens, man.
It happens.
No one's
It happens.
perfect, right? In the end, so.
But that's why they gotta hire people like yourselves.
Yeah.
To help walk them through the process earlier on. And I'm telling y'all, if y'all are there, like, hey, I'm 6 months out, call Coalition Group because they would love to spend a month with you, just educating you, walking you through the process. Because I do believe when it's time to buy, everyone wants the easy process. So we can give you the education. You can get all your stuff down packed. You know, we're going to do a show on that. This is what we're going to do, y'all. Next time y'all come on next month, I want to find a good lender. I'm going to put a form on YouTube, and I want y'all to send us the questions that you have. Because what I would love to do and what I would love to offer my audience and my community is a checklist. Like a clear, hey, these are the things you need to do. Like if you have a business, hey, you need to have A, B, C, D, E, F, G. So that way when you go to the lender, it's a smooth process. Of course, they may ask for some extra things, but every lender is going to ask for this. Every realtor is going to want to know this. Like, and I even think too, they need to know their budget of what they can afford, because the lender would tell them what they think they can afford, but they know what they actually can afford. So I want to work on that. So y'all, we're going to work on that. We're going to see if my lender is willing to come on. He may have to pay me a little something to come on my show. You know what I'm saying? Because Coalition don't have to pay me because they family, but I don't know. I ain't sending the lender that kind of money. They making all this money and not get me.
Preach. Preach.
Because they're a dope bank. Do you know if they do outside of the DMV area? Do you know? This one?
I think so, yeah. I think they do Philly, they do Philadelphia, they do Georgia, Tennessee, kind of like the East Coast region. North Carolina too.
No, okay, East Coast. I'm gonna hit him up and ask him. I'm gonna hit him up after this show, y'all. Listen, we try to be at 35 minutes, man. We try to give you all some solid stuff. We talked about a lot today, and this is some good stuff. We're gonna put the article inside of the show notes where you all can do some more research for yourself. We're also gonna link Coalition's group information inside. Y'all reach out to them. These guys and ladies, they have amazing ladies on their team that will help you. They will walk you through the process and make sure that everything's good for you. All right. So I got to go, y'all. I got a meeting for a big project here. We'll see you in the next show. Peace out.